Hello, trading is closed on June 23rd, 2016. My last call was that we should expect a large move today. That really wasn't much of a call since everybody knew it. I said there were a number of signals to go long and we were at support and had some buys, but I said the consequences of failure were too great and I wasn't going to make a directional call. I have pretty much the same thing to say today. We have a number of signs that this is a top. I look for a large move, but the consequences of failure are too great for me. And other than saying a large move should be coming, I'm not going to make a directional call. Let's just go over what the indicators are. During the day, MEJT said ultimately lower prices would print. We got the minimum as shown by this line. We then had a strong rally. We don't have to get just the minimum, but almost always we do. I should say a large percentage of the times we do. And so it's suggesting we might be undercutting this price again. In the afternoon, MEJT said ultimately both lower and higher prices would print, and that's what happened. And all these price targets have already printed. Well, standing in front of a raging rally like this is a good way to lose money. But there are some signs of exhaustion. All we need is a gap down. If that doesn't happen, a lot of my predictions fall by the wayside. So what do we have? First of all, we have a wall into the close. Walls in a high percentage of time lead to a gap down. Just be aware that usually the gap fills and then we go over this price here. So even if we get the gap down, this last rally here puts my whole scenario into question. We'll just play it one day at a time. So we have a rally into the close, which is often followed by a gap down. We have a close at the high of the day, a Hobson close, often followed by a gap down. Here's the trend line I've been talking about. We broke through it and closed over it. All we have to do is to go one tick over this close to invalidate the break, which the Marx indicators have as a valid break. However, if we gap down and do not fill the gap, this break does not count. We have to move our target up slightly, but it's still in the 1930s. So if we gap down and don't fill the gap, we have a large drop forecast. Here's an indicator I showed before, 125 a day moving average at 4.94%. That's pretty much right where we closed. Well, I thought I had the wave count all figured out, but it didn't really fit that well with today's action. So I played around and was able to come up with something else. If this is still 1, 2, 3, 4, and wave 5 ends here for A, you can see if you measure the height of wave 5, there's a nice Fibonacci relationship with wave 1. Now, what if this is A, and that's ABC, and that's C? Well, if that's the count, and you measure the height of B, you'll see that wave A is 78.6% of B, and wave C is exactly the same. So we have wave A, we're going to have wave A equals wave C, and that's B right over here, and the rally's over and a big wave C in red starts. Of course, this count could be wrong too. So all I'm going to say is a big move is coming tomorrow. If we gap down, as a number of indicators indicate is likely to happen, it could have a huge follow through on the downside. But the risk of being wrong is too high for me. And other than saying we have a good chance of a top here, I'm not going to make a directional call. I'll just say a big move's coming, and that's today's call.